very good, because these days most people use a very qualified kind of language. They don't say I'm good, I'm fine. They said so far fine. अभी तक ठीक है, so far so good. You're not putting any riders, caveats to it. I speak categorically, but these days because of COVID and bad environment, people put so many but, however.
Yeah. Life already is full of so buts, and if we start adding more buts from our side, it will be more problematic. So let's accept with happiness and gratitude all what God offers to us.
Correct.
Good morning, Kapil sir. Good morning, Manoranjan sir.
Morning. Good, ma'am. Your participant number says cross 200.
Yes, sir.
Very good.
Very good morning, Patil sir. Am I audible to you? Patil sir, very good morning. Am I audible?
Yeah, good morning. So it was muted. Now it is okay.
Right.
Good morning. Fine.
Good morning, Patil sir.
Good morning, madam. Very good morning.
Ma'am, are we good to go? We have all three panelists with us. Shall we start?
Yes, ma'am. Meanwhile, students, they'll be joining, or they'll keep on joining. You know?
Yes, ma'am.
Right.
Dear panelists, with your kind permission, shall we start?
Yeah, go ahead.
All right. The rich take incentives to open their purses and invest, loaded with cash as many are, while the rest seek livelihood security. Good morning to one and all. I, Simran Rohira, on behalf of FAMA Club at Prestige Institute of Management and Research, welcome you all to the panel discussion on the post-union budget 2022-23. To grace the occasion, we have with us our esteemed panel members, Dr. Manoranjan Sharma, Chief Economist, Informatics Ratings, Delhi; Dr. Srinivas R. Patil, Professor, KLS, IMER, Karnataka; Dr. Kapil Sharma, IMS, DAVV, Indore. I welcome all the dignitaries on board. We also have with us Dr. Nishan Joshi, Director, PIMRG in absentia; Dr. Navita Nathani, Deputy Director, Management; Dr. Tarika Singh, Deputy Director, Commerce, IT and Law. Dear faculty members and students, the awaited Union Budget 2022 holds the key to a better India. With this, let me take pride in introducing our institute to the gatherings. Prestige Institute of Management and Research is an autonomous UGC NAC accredited grade institute, and MBA course is accredited by NBA. It was set up in the year 1997 by Prestige Education Society Indore, registered under the Societies Registration Act 1860. The society was set up by Prestige Group of Industries with an objective to meet the widely felt need for globally oriented management and information technology education and training for professionals. The institute has grown to be recognized as a premier institute for higher learning. It is a major learning center in Central India. The institute has the approval of All India Council for Technical Education and the state government and is affiliated to Jivaji University, Gwalior. The institute offers MBA full-time, MBA Business Analytics, MBA Integrated Program, BBA, BCA, BCom Economics, Computer Application, BCom Honors, BBA LLB, BCom LLB, BA LLB, BSc CS honors programs. Institute is recognized under Section 2, subsection F, Section 12, subsection B of the UGC Act 1956. The institute is also recognized as a research center in management at Jivaji University, Gwalior. We at Prestige are committed to foster excellence in developing world-class managers, skilled software professionals, and erudite lawyers. For the same, we have different clubs functioning in the institute premises. One such club is Finance Club named FAMA Club. Now I would request Dr. Shivani Sharma to please give a brief introduction of FAMA Club. Please, ma'am. Shivani ma'am, you need to unmute yourself.
Okay. Very good morning to all the guests and faculty members and dear students. In an effort to develop the skills required by the corporate amongst the students, PIMR Gwalior has taken initiative in the year 2014 by formation of FAMA Club. The vision of FAMA Club is to promote a professional association within the field of finance at Prestige Institute. The club fosters an environment of discovery of recent trends and developments in the field of commerce and finance. In addition to this, it provides a comprehensive understanding of the finance industry to the students. What FAMA Club facilitates to our students? 1. Update with the key happening in the area of commerce and finance. 2. Industry interaction and practical learning. 3. Skill upgradation through certification courses. 4. Give an upper edge in the area of finance and commerce. 5. Live stock market trading sessions with experts on virtual platform. 6. Development of stimulate thinking and analytical skills. 7. Overall personality development as coordinator and member of the club. 8. Placement readiness session and much more. We offer lifetime membership to the students and make their strong career in the area of finance. The guiding force behind the success of FAMA Club are the faculties who bring in all the efforts in making the students updated in the field of finance. So here is the list of the faculty members, those who are associated with FAMA Club. Dr. Navita Nathani ma'am, Dr. Tarika Singh ma'am, Dr. Amitabh Maheshwari sir, Dr. Nandan Balankar sir, Ms. Gunjan Divedi ma'am, Mr. Saideep sir, Miss Nidhi Parprani ma'am, Miss Nidhi Jain ma'am, Miss Simran Rohira, Miss Mansi Pawar, Miss Kavita Rana, Mr. Glenn Mathias, Dr. Priyanka Chavla, and myself, Dr. Shivani Sharma. Moving further, I would like to brief about the purpose of organizing today's panel discussion on post-budget 2022. This event is planned for existing members of the FAMA Club as well as for MBA full-time and business analytics students of semester 1. The main purpose of this panel discussion is to provide insights to create real value of union budget and takeaways for the participants. In addition to this, the discussion intended to enlighten our students about the union budget, various economic reforms which will be discussed by the experts, and the role of budget in the economy and industry growth. This discussion will bring more clarity about the budget amongst the participants. We have invited expertise from a specialized area to touch each layer of the greater concern of the current union budget. Students can write their queries in the chat box. A question answer session will be followed the panel discussion. I wish you all have an excellent learning from this session. Thank you so much, Simran ma'am, and all the experts in the panel. Now it's over to you, Simran ma'am.
Thank you so much, ma'am, for the introduction of the FAMA Club. I'm sure the students will be benefited out of it and make use of every best opportunity coming their way. Thank you, ma'am. One of the marvelous things about the community is that it enables us to learn and understand things in a way in which we couldn't do as individuals. I am profoundly delighted to take this opportunity to introduce you all to few such people from the community of intellects who are our distinguished panelists. At first, we have with us Dr. Manoranjan Sharma, Chief Economist, Informatics Ratings, Delhi. He has a brilliant academic record. He was the Chief Economist of Canara Bank for 17 years, General Manager for 6 years, and Chief Learning Officer for 5 years. Widely traveled both in India and abroad, he is globally recognized as an expert in the Indian economy, banking, MSMEs, rural credit, financial inclusion, etc. He has made presentations and chaired sessions at national and international level. His papers have repeatedly been globally accepted. His papers and books, A Global Financial Meltdown, Leading Issues in Indian Economy, Studies in Money, Finance and Banking, India's Transforming Financial Sector, Dynamics of Indian Banking, and Indian Economic Policies and Data have been widely acclaimed. He has around 300 publications included in the Business Review, Cambridge, US, Journal of Economy and Business, Bulgaria, occasional papers at RBI, Economic Times, Business Line, etc. His views have been repeatedly cited in the Associated Press, New York, Dow Jones, New York, International Herald Tribune, New York, Wall Street Journal, New York. It's a pleasure to have you with us. I welcome you on board, Manoranjan, sir.
Thank you, ma'am.
Up next, we have Dr. Srinivas R. Patil, Professor at the prestigious Karnataka Law Society's Institute of Management Education and Research, Belgavi, India. He did his PG in Management and Commerce with a doctoral degree in Management. He has also been honored with DLET. He has around 21 years of teaching experience and also is carrying out research activities in various areas of management and economics. Dr. Patil has authored 56 research publications in national and international journals, including UGC Care, ABDC, and Scopus on various issues relating to stock market, foreign exchange market, particularly with a global perspective. He has presented 46 papers in national and international conferences and received awards for his best papers. His article on various topics on national and international concerns are published in newspapers and magazines. He is being invited as subject expert from All India Radio, FM radio, and TV channels on various occasions. He is a chairman Board of Education and a member Board of Education and Board of Studies for many universities and autonomous institutes. 2 research students have successfully completed their PhDs under the guideship of Dr. Srinivas R. Patil. He's been invited as a resource person for faculty development workshops, refresher courses, seminars, conferences, and student empowerment programs. Dr. Patil is also a recipient of Rashtriya Shikshak Ratna and the Best Teacher Awards. He served as professor in various locations like Vijaypur, Hyderabad, Bangalore, and Hubli. Dr. Patil is a research supervisor guide in VTU Belgaum. He is serving as chief editor, associate editor, and reviewer for many peer-reviewed national and international journals. Dr. Patil's research interests are focused on international financial management, security market, with special focus on Indian and international economy. We welcome you, sir.
Thank you.
Last but not the least, we have with us Dr. Kapil Sharma. Dr. Kapil Sharma holds a PhD in management and an MMS degree from International Institute of Professional Studies, Devi Ahilya University, Indore. Apart from the above mentioned 2 degrees, he has earned a diploma in banking and finance from Pondicherry University and a degree in law LLB from Devi Ahilya University, Indore. Currently, he works as an associate professor in the area of finance at Institute of Management Studies, Devi Ahilya University, Indore, India, and has 18 years of experience in the area of teaching, training, and research. His current prominent academic and administrative responsibilities include being Nodal Officer for Center of Excellence and Chief Academic Coordinator at the Institute of Management Studies, Devi Ahilya University, Indore. Dr. Sharma is the recipient of Best Research Paper Award in 2003 at AIMS Convention, Bhubaneswar, Orissa, India. He has to his credit 4 books and 60 research papers, articles published in reputed national and international journals, and authored 4 books 8 students have completed their PhD under his supervision. Dr. Sharma is associated with a number of universities in India in different capacities. He had the privilege to visit USA as a part of team member of the prestigious Group Study Exchange program of Rotary International in 2009. Besides academics, he is an ardent reader of world history and current international affairs and keeps updated on issues of international concern. I feel delighted to welcome you, sir.
Thank you, Simranji.
All right, so with due permission of panelists, shall we start with the discussion now?
Sure.
All right. So before we start, let me just have a brief of what is the discussion going to be all about. In managing a country, the government has a diverse range of powers, including preserving law and order, providing national security, fostering economic stability, and promising social transformation. To successfully complete these obligations and sustain the country's economic and social framework, the government needs some necessary income. For this, a well thought out union budget is required. Our Honorable Finance Minister Nirmala Sitharaman has presented the union budget for the year 2022-23 as a part of India's 25th year lead up to India's 100th year independence. But what exactly did this budget said? Did this budget fulfill the expectations and promises of people? Because in fact, it was expected to be a booster budget, right? So did this budget give directions to the economy going forward in the year, entering into the year 2022? So my first question is for Dr. Kapil, sir. Sir, what do you think? How big is the budget to the boost to the economy? Over to you, sir.
Thank you, Simranji, for the question. Before I answer this question, a very warm namaskar to everybody, especially my co-panelists, Dr. Manoranjan ji and Professor Srinivasan ji. The question is very vast question, and I would expect that the participants do not take my answer as a judgmental answer for the overall budget. Okay, so it is very specific to the word boost that Simranji you have asked. Boost generally means what is the kick that the budget has given to the Indian economy. And frankly speaking, these are my personal opinions. I do not think that the budget has given any boost to the Indian, or it expects to give boost to the Indian economy in the short run. Yes, but in the long run, we may have a different opinion per se. Now, when you talk about boost to economy, boost would generally come from two quarters. One is the government expenditure, and second is the consumption capacity of individuals. On both the fronts, I feel that this budget lacks probably again on the shorter range of time. If you look at the GDP expectations of the budget, they roughly touch around for the next coming year. For the coming year, it is around 250 lakh crores. And the government expects to spend around 39 lakh crores, roughly around 15% or so in the expenditure. Now, if you transcend this towards the current expenditure, the revised estimates that have been given currently for this year is 37.37 lakh crores, which turns out to be approximately 16.2% of the current year's GDP, which is estimated around 232 lakhs. So in real sense, when we see as compared to the current year, the estimated expenditure that the government plans for the next year is low. This expenditure of what government talks about 39 or 40 lakh crores for the next year is again based upon an estimation that the GDP will grow at around 11% or so. However, there is a contradiction when we talk about other estimates, which takes to GDP at 8.5% growth for the next year. Even if I take 8.5% as the growth rate for the next year, when I boiled it down, it would roughly touch around in terms of inflation, it would be around 2.6%, 3%, which does not stand a very good figure because currently we are sitting on an inflation of around 5%. And if you look in the coming days with the geopolitical conditions and many other things, the inflation is bound to go up. So in real sense, when I'll put these numbers of government expenditure for the next year, they are not very enthusiastic. So there will be no boost. Another thing, there is a lot of talk about capex government putting up around 5.5 lakh crores for the next year. But the revised estimates of this year itself say that By November 21, the government ended up spending about around 6 lakh crores. The estimation by the end of this year is 7.5 crores. And I do not see how in the next coming few months they will be ending up, they'll spend up around so much amount of money. So when you compare the capex of the current year with the capex, planned capex for the next year, that is also low. Now, this was on the front. Another important thing that I want to point out, and please stop me if I'm exceeding the time. Another important thing that I want to talk about, all these expenditure, these long-term capex here. What we currently need to boost the economy is an immediate response to the economy. I am dying out of hunger, and government is saying, "Don't worry, we are building a multi-cuisine restaurant just next to your house." No, we need expenses that would deliver result in the shorter run. These all capex will not deliver results in the shorter run. Another thing that the rural economy drives the entire rural economy, drives rural consumption. And look at what has happened on the rural consumption side. Schemes like Manrega, their expenses have been also curtailed down. So the real cash inflow in terms of the consumers, the rural consumer, which form the major chunk of the Indian economy, that is not there. Moreover, at many points I find that the provisions for giving boost of the economy, they're contradicting their nature. On one hand, government talks about privatization. On the other hand, it talks about giving more money to the public sector. We are talking about building big mega cities, with the contradiction that we want to cut the carbon norms. So there is a contradiction instead of focusing. So in the short run, I do not see that this budget is going to give any boost to the economy. Yes, but we may expect, if the COVID situation improves and some additional methods, some additional responses are brought in during the course of the fiscal year, we might see a boost in the economy. Thank you.
All right, very correct, Kapil sir. And amid lingering the global headwinds and economic uncertainties which we have been seeing around, our Honorable Finance Minister has continued to prioritize growth over the fiscal consolidation which we have been seeing in the second straight year sharp. And there has been a sharply expanding capital and infrastructure spending we have seen in the union budget. So my next question is to Manoranjan sir. Sir, CAPEX has clearly emerged as a thrust area in the budget, and there is a proposed expenditure, as very rightly said by Kapil sir, of about nearly to 7.5 lakh crores. So how do you view this proposed CAPEX of 7.5 lakh crores, sir?
Okay, thank you, ma'am, very much for a very interesting question. I think some aspects of this question has already been dealt with Dr. Kapil Sharma, but I have my different take. Some points I agree with him, some points I do not agree with him, because as it's widely said, if there are 5 economists, there are 7 opinions. Now, as almost all of us are aware, Indian economy has been passing through times of great challenge, turbulence, difficult times. Last 4-5 years, if you look at the situation, we have been hit by what I call a triple whammy of demonetization, the rolling out of the goods and services tax, and finally the COVID-19 pandemic, which is widely considered to be once in a century kind of an event. Nearest comparisons which come to mind are the Spanish flu of 1919. The COVID-19, in terms of its severity, in terms of its magnitude, has sometimes been compared to the global financial crisis of October 2008 and even the Great Depression of 1929. But the data and evidence, which has been placed in public domain by a large number of multilateral institutions, clearly substantiate the thesis that this is a far more severe crisis in terms of its ramifications and repercussions. So in this context, the capex proposed of rupees 7.5 lakhs is very welcome. What we also have to keep in mind that in subjects like economics, finance, we have this concept of crowding in of private investment, and usually in these kind of expenditures, a multiplier of 4 is taken. So if you use a multiplier effect of 4, obviously this would lead an investment of 30 lakh crore, and this would help industries across the development spectrum, particularly cements and metals, roads and railways to dominate. To my mind, a major challenge is to ensure that this amount is spent on time and that the government does not wait till the last quarter of this fiscal Q4 for implementation. Thank you.
Very correctly said that this amount is not for a short term, sir. I believe, like, since India has grand ambitions for the next 25 years, with a nation looking to be a global economic powerhouse by the 100th year of independence. So, my next question is to Dr. Srinivas, sir. Sir, it is always rightly said, and it is believed as well, that healthy manpower leads to the increase, leads to the prime growth of a nation. But the same wasn't reflected in the budget I see. We saw a mere increase in the 200 crore allocation in the healthcare sector. How do you justify and how do you think that this will turn, I mean, this will have some impact on our GDP with a projected growth rate of 8.5%?
Let me thank the organizer for giving me an opportunity. This is again a wonderful program you arranged. So this answer to this specific question is related to this healthcare sector. You have rightly asked this question because majority of the people are thinking that what is the benefit to this common people and even the people in the certain sectors also. So in this case, this allocation of this 200 crores is given to this health sector. But in other areas also you have to think on this one. Even this upgradation of this Anganwadis and even the other parts also they have introduced it. So here this the digital touch-up is also given to this area, and even health and
Patil sir, you need to unmute yourself. Patil sir, I think by mistake you have muted yourself.
Oh, okay. Thank you. Sorry, I didn't see this. Let me thank the organizers for giving me an opportunity. Allocation for this health sector is again one of the important area where this is considered. But we can also think on a different areas also, like this Anganwadi's upgradations is again one of the important area which they have touched upon. And in this case, they have also mentioned this Mission Shakti, Mission Vatsalya, and even Mission Saksham, then Poshan 2.0. So these are some of the areas which they have considered, and even this PM Awas Yojana. So these are all the areas where this will be directly leading to this health sectors only. And even we can see this around 60,000 crores, that is to 3.8 crore households are given this tap water facility under this Jal Shakti also, Har Ghar Jal Shakti, like that. So these directly, though they have not allocated this fund to this one, but the other areas where this is there, so this will directly help this health areas also. So this is what related to this one. So even this Ayushman Bharat is again one of the important parameter we can say this, and this poor people will be also getting this health related things also at a lower cost, lower amount also from this prestigious hospitals also. Ayushman Bharat probably is one of the best this scheme introduced by the government, and the boosting has been also given in this present budget also. So another thing is also this capex is again one important area where is both the resource person have also touched upon. So this also helps for this Indian economy for a longer period of time. We can say this is the laying stone, foundation stone for the next 25 years. Because this amount of spending, we cannot say it is expenses. This expenses can be considered an investment. So investment normally gives this benefit for several years. So this benefit of this investment will be there for several years. So this will be directly helping this economy. So this may be also helping this to increase this GDP or the national income per capita income also. And by the way, this economic health will be also improved. So that's what we can say based on this budget.
Thank you, Patil sir. I mean, lately we have discussed a little about different sectors, but Kapil sir, what do you think this budget has for a common man? Since a good news was expected, but we see
Yeah,
no
please, please.
change, no good news coming for a common people from the taxation perspective, and we did not see any changes in the income tax slabs as well. So how do you view, or what budget has in its pocket for a common man, sir?
Simranji, during the budget, I was viewing the budget with a friend of mine who happened to be from the media side, and he covers the financial news and other things. So the moment finance minister said that there are no budget provisions or no income tax provisions, he just said that now it's time to close the television sets. Because what has happened over the period of time, look, if to be on a sarcastic side, I would say that the union budget has lost its relevance. A major portion of the budget has gone, the provision now, the work is being done by the GST council. So the union budget is hardly left with talking about some announcing some big schemes and imports and the what you say tax cuts, individual tax cut. So when that was not announced, yes, it was disheartening. On a larger scale, if you look, yes, we see that the common man's hands are empty. Okay, direct benefit that you could have said that this budget has given, it has remained empty. What we are seeing in this over a period of time, the focus of the government is towards supply side, not creating the demand side. When we say that, when I say demand side, let's go back to the Keynesian theory and say that put money into the hands of the people, give them employment. So that thing has not happened there. But if you look at the larger canvas, the social security system that the government has tried to build up in terms of bringing more people into the bracket of health insurance coverage, providing more benefit to the people of the older age, and at what Professor Patil has talked about, a large number of social security systems that have been put in place, really they would transcend into enhancing the overall life and providing support system within the community for the common man. Obviously, in terms of real benefit, bringing the more money into the hands of the common man, that has not taken place. And what I am foreseeing from this government, that the government is getting out of the tax subsidy regime, probably discouraging the individual investments and trying to see that come more towards the market, come more uh, towards the market side, rather than going towards the other side, looking for more and more tax benefits and subsidies. So that is something that we need to take care, that yes, the common man felt unhappy by this budget.
Manoranjan sir, there is a question in chat box for you from a student child, that according to you, budget is which sector is more is getting more benefits from this budget? This budget is favorable for which sectors as far as the like taxation part? Yes, sir.
Okay. Madam, I'll say that this is a broad brush approach where the concerns of investment has been taken into account, infrastructure, and also to a certain extent concerns of distributive equity, financial inclusion. We have a focus on the cane betwa project, agriculture processing. We also have some budget proposals for universalization of education. So, on the whole, I would say this is a budget with a growth orientation together with concerns of financial inclusion. So, growth plus distributive equity seems to be the big picture which is emerging out of the budget proposals. Thank you.
Thank you, sir. Thank you.
I want to add point in this case.
Yes, sir, please.
When in terms of this allocation of fund for this different portfolios for this ministries also,
Yes,
the
sir.
defense ministry portfolio has been given this huge amount, because around 8 to 9% of the total budget is being earmarked for this defense. And majority of the people normally think that this defense more budget may not be good also. But one point we have to understand here is that this majority of this purchasings for this defense related materials are being spent for purchasing from this Indian only. Now this Atmanirbhar Bharat has been again introduced in India, and under these schemes, total 8 to 9% of the total budget is earmarked for this defense, of which 60% of the amount which is spent for purchasing materials from Indian market only. So here this amount is again being reused in the India only, and by this boosting of this local industry has been done, and this also leads to this increase in the GDP or the national income also. So this one area where this majority of the fund is allocated for this defense. As far as this increase in this percentage is concerned, it's telecom industry is given increase by 90% plus as compared to this previous budget also, and similarly for the other sectors also. So this is the addition to this point.
Yes. Thank you, sir. Thank you.
Ma'am, if you permit, can I add one point to this entire?
Sure, sir. Please, sir.
My both co-panelists have really. If you look at the philosophy of the government in the last 2 years, if I'll stretch back to the previous budget and this budget, from the 2014 when this government came into power, when we got NDA one, we were saying, come make in India. The entire philosophy has changed from make in India to made in India. Now look at the amount of boost that the government is giving in terms of support to the startups, in terms of support
Yes.
to the MSME over a period of time. So instead of asking people from foreign countries, we are not saying no to the foreign capital, but we are saying that, look, Foreign capital is necessary. We need foreign capital, but we need our own local industries also to flourish. And look, some of the very important import tariffs that the government has brought in, this is a direct support to a number of MSME sector companies from the MSME side. So that is something that is commendable in this budget, and that's what I wanted to add in this.
Okay. Thank you so much, every panelist, for the answer. Such a great inputs. Now it's over to you, Simran ma'am.
All right. Thank you, Shivani ma'am. Manoranjan sir, we talked about the concerns of investments, right? And the matter of RBI's digital currency, what was also touched upon, that we'll have a digital currency in circulation from the upcoming next year. But on the other hand, we have taxed about the earnings from the digital currency at a rate of 30%. So how do you think will this change investors' perception towards virtual digital assets and earning from them?
Thank you, ma'am. This is an innovative measure which has been proposed in this year's budget. To my mind, there has been an acknowledgement of cryptocurrencies as an asset class, and taxing the gains therefore is seen as a move towards legalizing them as currencies in the future. Here, to my mind, the government of India is simply saying that given the proliferation of crypto transactions through certain crypto exchange platforms in India, such transactions will be taxed. The purpose here seems to be twofold. One, discouraging reckless crypto transactions. This is why a tax of 30% has been proposed. To place matters in perspective, I would like to draw attention to the fact that gains from lottery earnings are taxed at a marginal rate of 30%. So this is being treated as some kind of tax to windfall gain. And second, enhance government revenues. I think 2-3 days back, I came across a statement by Mr. Mahapatra, who is the chairman of CBDT, Central Board of Direct Taxes, and he has given some rough approximation rough calculation that the government of India expects by this crypto taxation revenues of well over 5,000 crores in this year. Another aspect of interest here is that the government of India has said that they will go in for central bank digital currency, CBDC, which will be government controlled through the Reserve Bank of India. The purpose here seems to be reduce cash transactions and provide a cushion of legally backed digital currency against uncontrolled digital or virtual currencies. Now, in this context, I would like to highlight the fundamental difference between CBDC and cryptocurrency. While CBDC is legally backed, cryptocurrency is not legally backed, though both use the same blockchain technology. Thank you.
Thank you so much, sir, for your input. Students, you are requested to post your queries, your questions on the chat box. Parallelly, we would take up the questions from you as well in case you have any questions in specific to be asked from any specific panel member or in general as well. All right, okay. India's 2022 budget aims to harness the momentum that has made India the fastest growing largest economy, targeting towards new growth opportunities in the green economy and tech industries. My next question is to Srinivas sir. The budget has also mentioned in replacing the SEZs, that is the Special Economic Zones Act 2005, with some new legislation to make the states stakeholder in their development. How will this boost the industrial hubs to increase the competitiveness in their exports and in turn to attract more foreign capital, making India a global economy?
Yeah, so it's one of the important question. Thank you, madam. So as you said, this is a special economic zone which has been introduced in the year 2005-06. The objective of behind this starting this SEZ is to promote this export oriented business in India, and accordingly this tax holidays have been given to this SEZs. Normally this 100% income on export is again exempted on all the companies, those who are set up in this SEZ, and again 50% of the income on the export is again given tax holiday for the next 5 years. So like this, first 5 years 100%, next 5 years 50% is given, and again 50% tax holidays are given for the next 5 years also. So considering these things, almost this the removal of tax on this SEZ has been again done because they have completed around 10 to 15 years as of now. So therefore, these SEZs are not in the picture because tax holidays are not there for these people now. So therefore, in lieu of this SEZ, this separate legislature is again being introduced, so that this local government, means the state government, will be also having a partnership with this enterprise and even this social service hub also. So therefore, this act is again being introduced from this year. Therefore, this more of this Indian products or Indian companies will be starting this kind of things, and even this export oriented will be also set up. So that is again one of the important area where they have touched upon. Similarly, this existing SEZ infrastructure can be also used for this kind of things, and normally this boosting will be given for this Indian companies. So the idea behind this is this state governments will be also having a partnership with this kind of things. Another is this existing companies, those who are set up in this SEZ area, are not having this any kind of this tax benefits from the central government. That's the idea behind this removing SEZ and introducing this new area also. That is one important area.
All right, thank you so much, sir. We have touched upon a lot many sectors in the discussion meanwhile, but being a person from finance, it always fascinates us that how will the capital market be impacted, and how will this budget give a boost or give a touch to the capital market? So my next question is to Kapil, sir. Sir, what are your views on the impact of budget to the Indian capital market?
A very prominent question, ma'am. If you look at the movement of the stock market immediately after the budget, it gained around a 1.5%, and then again it settled down. I'm not attributing this settling down and daily ups and downs primarily to budget, but because, as I said, there are a large number of other geopolitical reasons that are leading to it. But one thing is there, that the financial markets for a very long period of time, they have been looking forward for the budgets for scrapping of the long-term capital gains tax on equities, then reduction of security transaction tax, and then reduction and cuts in the dividend taxes, all those things, those big bang reforms, if we say. For capital markets, they have not come. An important aspect about the digital virtual assets, Dr. Manoranjan ji has already covered. Is one point that I want to add into that, and then I'll move on to, then I'll talk about another things, is that apart from putting up a tax of 30% on the profits from digital virtual assets, remember the government, the RBI has, they have not called it as currencies, because you cannot tax currencies, you can only tax assets. The RBI Currency Act, they say that. So apart from that, there's a 1% TDS that would be levied for transfer of digital assets to Indian residents. So if my brother is in US and he transfers some bitcoins or some to me, it will also. But however, it seems very difficult how the government is going to monitor these transactions, personal transactions, because a number of them are taking places on platforms which are not controlled by Indian government. An important measure for the stock market that has come up in this budget is the bonus stripping. See, we all know that there was a general practice in the market of buying the stocks prior to the bonus record date. And once the stocks trades at X bonus prices, preferably at a lower price, people used to sell them, incur some losses, and those losses they used to set up from profits from other securities. This bonus stripping was already banned or already discontinued for mutual funds. But in this budget, the government has come up with the provisions of extended those provisions of not allowing bonus stripping for equity shares, for real estate investment trust, and for infrastructure investment trust also, because primarily these all provide income in the form of dividends. So there is a similarity, there is a at par treatment of bonus stripping for mutual fund shares and other things. Moreover, this will be effective from 1st April 23. So there is a time of year time has been given, so that people can square up their positions and other things. Another very important thing that has been announced in this budget is surcharge on capital gains. Prior, what was happening till date, that the surcharge on the capital gains for listed equities was capped at 15%. So the maximum surcharge that could be charged was 15%. But for unlisted shares, this surcharge was as high as 37.5%. What the government has done, government has said that, look, whether it is listed, unlisted, or mutual funds, the surcharge would, maximum surcharge for all would be 15%. So there they have bought a parity for all types of securities. But one thing is to be noted that the market was also asking for reduction in the capital gains tax. So that has not taken place in this budget. So apart from digital virtual asset taxation, these are the two prominent changes that the budget has mentioned for the capital markets. Thank you.
All right.
Kapil sir, there is a question from a student, that is Harsh Setia. He is a student of MBA Business Analytics, 6th semester first. He's asking that how does it affect the crypto market when the government is putting taxes on the crypto? On the other hand, they say that taxing crypto doesn't mean it is legalized yet.
Oh, that's
Doesn't it create a confusion in the market?
it is creating a confusion. It is creating a confusion because, as you said, that you can tax only income from legal businesses. Now,
Yes.
on one hand, the government is saying that we are going for, as far as the profits, income, taxes from cryptocurrencies is concerned, we are happy with that, but we are not going to make it legal. So these are two contradictory things here. However, when the government has, as Professor Dr. Manoranjan ji has already said, that the basic objective of taxing crypto is to discourage people from investing into these currencies. And maybe by the end of the next, by next year, when the RBI is come up with its own digital currency, initially it will be for wholesale only, retailers it would come at a later point of time. Then probably the government would come and in the meanwhile, the government, instead of one fine morning coming and saying that it is illegal and people lose a lot of money, government is giving them an exit route for some time. So okay, you may come out of that market, but when you are coming out of that market, give us some money. And maybe in due course of time, we'll come see a detailed regulation coming, banning these things or whatever the things we say, once the digital currency of RBI comes in place. So as on date, this is a confusion, but it's a warning sign for the investors. Get out of the market, book all your profits that you have done, pay 30% to the government, so that whatever earnings you will be getting, that will be legalized.
Okay. Okay. Thank you, sir. Any inputs from Manoranjan sir or Patil sir on this question?
Yeah, so I want to add some points, as Sir said. So this is the discouraging these people to invest in this cryptocurrency because it's not a legalized version in India. But as Sir said, this is a confusing actually. But whatever this income which these people are getting from this cryptocurrency should be taxed, because this, to that action government will be having this income also. 30% tax on this the cryptocurrencies income will be there. And similarly, we also have some more taxation aspects on smuggling business and even other things also. Though it is not legalized, but still this government is imposing tax on the smuggling business also. So in case we declare this income from the crypto or smuggling or any other this kind of banned areas, this has to be taxed also. So that's how this one area. And another thing is encouraging people to go for the stock market or even other legalized versions also. So we have also observed that 1.6% is increase in this stock market on the day of this budget presentation. So similarly, these people have started shifting their investment from this crypto or other areas to this stock market, that we have seen as also. And the years to come, this government is again introducing this e-rupee also. So these people, those who are interested to invest in this kind of this digital currency, will be definitely having this legalized version of e-rupee, and people will be going for that. So that is the objective behind this government introducing this 30% tax on cryptos.
Okay. Thank you, sir. Manoranjan sir, any remarks from your side? Any?
No, I agree with the previous two speakers, panelists. Thank you.
Okay. Thank you, sir. Yes, ma'am. Simran ma'am.
There has been a lot of focus on the digital economy, fintech. Fintech companies and all the small NBFCs had a lot of expectations from this budget. So my question is to Manoranjan sir. Sir, how was this budget able to dive deeper into the fintech system and push the community from bridging the financial gap between the users and the financial institutions?
Well, thank you, ma'am. All of us are living in an increasingly digital world. The digital ecosystem seems to have become quite commonplace. To my mind, 5 basic aspects of financial technology could be identified and isolated in this budget. One, obviously, is the blockchain technology. Digital rupee would be issued by the Reserve Bank of India starting 22-23. 30% tax will be levied on cryptocurrencies. Third, in order to capture the transactions details, it was proposed to provide for TDS on payment at the rate of 1%. the budget proposal to set up 75 digital banking units in 75 districts. All post offices will soon be connected to the core banking system to improve financial inclusions. And the FM has also stressed that the financial support for digital payments announced previous years continue platforms that are economical and user friendly. So I think these are very welcome steps and also contextually significant. Thank you.
Thank you, sir. My next question is not specific to any specific panelist, but in general, what did this budget had? I mean, being a woman, I am very much fascinated to know what did this budget had something special for a woman, since we have been very economically deprived. I mean, we have suffered a lot economically during COVID times. So, what special did this budget had for a female section of the society?
Unfortunately, you do not have a female panel in the in this panel
Right.
Not specific, though I may not be very clear in my answer, but yes, look at as I mentioned earlier also, look at the type of support system, social support system that the government has launched specially for females, whether it is providing sanitization or what you say, washrooms in schools, encouraging. That was one of the major factors of encouraging female students to go towards the school. You may not see direct benefits in terms of money put into the pocket of them, but over the ecosystem, in terms of creating security, in terms of creating an environment for skill development, in terms of creating an environment for education, free education, for security, in terms of their strengthening themselves to stand on their own feet, the government has put up a large number of schemes which are definitely resulting benefits in the long run. And from being from the state of Madhya Pradesh, I can say that Madhya Pradesh was the first state where this government started Beti Bachao, Beti Padhao Andolan, and now this has been replicated into the entire country, and wonderful results have come. So such type of schemes which have been not specifically mentioned in the budget, but as I said, now budget today has lost its significance because the government has the liberty of putting many things outside the budget also. So these things are definitely leading towards more of women empowerment and women empowerment in terms of their social and economic upliftment.
Just to add to this point, so normally when this budget is being presented in the government parliament, so people normally think that what is the benefit to me? So it may be the common man or the rural people or agricultural belt, whatever it is. So people will be normally thinking that what kind of benefits we are getting from this budget. So obviously, women is also one area where they are expecting. And now people should stop thinking that what is the benefit to me? What is the benefit to this common people or agriculture or whatever it is? The total schemes which are introduced in this kind of things are benefited at large, not to the particular people. So it may be with respect to Skill India or even this Digital India or whatever it is. So this will be largely beneficial to all the people, irrespective of the people. So in spite of having these things also, there are some specific schemes are also introduced for this women people also, as sir has suggested also. Even this Anganwadi related kind of things are also there, like Saksham kind of things are there, then Mission Shakti. So these are some of the areas where they have touched upon. And even this, in case banks are giving loans to this people for constructing house or even purchasing a house. And joint account will be also introduced now. Earlier, we didn't have this kind of joint account. So in case we wish to take a loan, the wife's account is also introduced. And normally this government is also giving some Pradhan Mantri Awas Yojana schemes. So huge amount of benefit will be also given to the people, those who are having this certain income limits also. So this is one area we can also consider. And this scheme has been extended in this budget also. That is there.
I want to add the budget itself was presented by a female.
Yes, absolutely.
So that speaks millions about the women empowerment in this country.
Right. Absolutely, sir. Manoranjan sir, your views on this? Manoranjan sir, I think you have a low bandwidth of your network. You're not very clearly audible to us.
Okay. Well, what is the subject on which you want my response, ma'am? Women empowerment.
How is a women benefited out of the current budget? What is there in budget for us?
I think as all the preceding two panelists have clearly brought out, that there is a significant improvement in improving the ecosystem for financial inclusion, MSMEs, digitization. So all these are broad brush approaches, and when they benefit all sections of society, obviously women are a very important segment. Approximately, they constitute something like 49-50% total population. They would certainly be benefited. Thank you.
Thank you so much. Since we are a globalized economy, so it is very important to touch upon the balance of payment aspect as well. The fiscal deficit was estimated to be at 6.9% in the financial year 22, compared with somewhere near to 9.3% in the financial year 2021. The deficit budgeted to be at 6.4% in the financial year. This is what the budget has estimated. Patil sir, I would want to know your views. How is this current budget putting an impact on the balance of payment, and how will it, help us in bringing down this fiscal deficit?
Yeah, thank you, madam, for this question. Normally, when we say this balance of payment, is now we will be having two important accounts. One is current account, another is capital account. So capital account talks about this total investment by foreign countries or even India into other countries in terms of FDI and FIIs also. So coming to this current account, we have this exports and imports. So we have current account deficit, CAD is there. So that is this deficit part to be reduced. So government has been encouraging exports from the last many years also. Earlier government also have done, and this government is also have been doing the same things. So majority of the amount what we are spending on importing is this oil, gold, and even electronic products. So these are the three important areas where this government is spending the valuable forex reserves. So we have around a huge amount of forex reserves compared to America and even other countries. We have a good amount of forex reserve also. But this forex reserve we are spending for importing oil and oil products, petroleum products, gold also. So in order to reduce this deficit size, this government is again going for some different alternative things also. Say, for example, we are spending huge money for importing oil. There is no alternative that we should not stop this importing oil. But what this government is doing is they are promoting these e-vehicles also. So electronic vehicles being introduced in India, and even support is also given by this in the budget also. So those who are going for this e-vehicles also, so less than around a 40 speed, above 40 speed also, there are some categories are there. And the battery swapping is again one of the important area where so this is what they have touched upon. And other thing is like, sorry, there was a call also. In order to avoid that, even this ethanol is again being introduced in this oil also. So 10% was introduced earlier, now it is increased to 10 to 15% also, because to that extent, this importing oil from the different countries will be coming down. So we are highly depending on importing on other countries only. So this one area, and even this promoting solar and even this wind power energy. So this is again one area where this government is thinking. So another is to reduce this import of gold also. Alternative solution is also this government has introduced that the sovereign gold bonds also. So in case we want to purchase a gold, we have to go for even the e form of the gold only. So just purchase the gold, it's in the e form only, that's a digital only. And in case you wish to sell also, government is giving around 2.5% this interest also on that, and this capital appreciation will be there. So people, those who are interested in investing this gold, are encouraged to go for this sovereign gold bonds. So this reduces the burden of importing gold from other countries also. So this will be again strengthening this balance of payment also. What I'm telling is this will be also leading to help the balance of payment. So this one area also. And the other thing is also like what I have said is defense also. Though the government is earmarking huge amount for this defense also, and 100% FDI is permitted in defense manufacturing cases also. And government is purchasing majority of the around 60% of the total these materials are purchased from this Indian market only. And similarly, this Atmanirbhar Bharat is again introduced in India, and amount is again spent for this one. Make in India is again the concept means it may be the Indian company or other countries companies also, whatever it is. But you have to set up your company in India, and you have to sell India or outside India also. So by this, we will be generating this employment opportunities, increasing the GDP, increasing national income, increasing the per capita income also. So this is one of the important area where they have touched upon for the last many years also. And even this budget also they have introduced also. So by doing this kind of thing, this current account deficit percentage will come down. So this one area they have done it also. So this is what I wanted to say that. So this will also help us for reducing the dependency on the other countries. Even the forex reserve can be also saved to certain extent also. Yeah.
Okay. Sir, there's one question for the panel members from Savant. He's a student of MBA full-time. He's asking that according to Financial Ministry, disinvestment of LIC and other profit-making PSUs will be in coming 3 to 4 months, like oil and gas, etc. How it will affect the economy and budget? Will it be there any effect on the economy, and will it be any changes maybe required in the budget norms or anything?
Ma'am, may I take it?
Yes, sir. Sure, sir. Please, sir.
Ma'am, if you go through the budgets of the last few years, you will always find the issue of disinvestment figuring prominently. But to my mind, this is a budget with a difference in the sense that this time things seem to be on the right track. The Air India disinvestment is already completed. The process seems to have been completed, and in a seamless manner, the ownership has now passed on to the Tata's group. Hence, to my mind, there is no mistaking the intent of the government of India in achieving the disinvestment target of 65,000 proposed in this year. LIC investment is going to be the mother of all disinvestments in India, because by all estimates, there is huge embedded value. So there is the issue of unlocking value through the issue of this IPO. And but one major issue of concern to the retail investor, also to the remains to be the pricing of the LIC IPO. There has also been some welcome attempts towards monetization of assets and other things. But in case of LIC, this needs to be keenly watched across the country. And I think the pricing of the LIC IPO is going to be something to watch out for. Thank you.
Okay, sir. Sir, any opinion, any point from other panel members?
Ma'am, can I just want
Yes.
to add upon, and I slightly beg to disagree with Dr. Manoranjan ji on the issue of disinvestments, and that is a fundamental disagreement. Sir, please excuse me for this. The disagreement, as far as the disinvestment of Air India seems to be, that seems to be a good move, because it was a loss-making unit and we were pumping huge amount of exchequers money into that one. But I do not see the government's logic of selling the profit-making units, and primarily the reason for making the disinvestments are not clear. Generally, the world across, the disinvestments, if we go back to the Thatcherism, where Margaret Thatcher first came to United Kingdoms in 70s and she started disinvesting. So the objective was that, look, these are white elephants and they're sitting on the exchequer's coffers and they're seeking the money. So that logic seems sound. That logic seems good. But selling a profit-making unit like LIC, and look how LIC has been moved to this year. If you look at a few years back, LIC was forced to buy IDBI shares. Okay, and that was the first time LIC recorded around huge losses out of its investment activities. And today, after a few years, we are going for the. Moreover, the government is not clear with in terms of the amount that the government will raise out of this money. For what purposes and where it will be used? Would it be used in a similar way as the reserves of the RBI were used? 1,45,000 crores rupees the RBI gave out of its reserves, and where the money has been used is not clear. So until the government makes clear its intentions with respect, the process may be fine. I do not disagree with the process of disinvestment, because earlier the debate was more on the process, how you are giving it. It was not a transparent process. The beauty about this government is it is following a transparent way of disinvesting, but the actual motives of disinvesting the profit-making public sector units is not clear. Moreover, the receipts from those disinvestments, where they will be used, that is also not clear. I guess if the government comes clean on these two issues, it would get huge support from across the board.
I want to add 1 or 2 points
Yes,
only.
Yes, sir.
It's not a question of privatizing this LIC or it's a disinvestment. This percentage of holding the shares from the government is reducing, because this LIC is going for IPO now. when this company is going for IPO means it's the publicly holding company because anybody can invest and anybody can control also. That is the one important area where this LIC is going for that. So we can also see this ICICI Bank also. ICICI Bank was again initiated by Government of India. Now it is a public company it is. So LIC is going to become a public company, not a private company. Percentage of government holding will come down in the LIC, whereas the same portion will be held by the public people. So in this case, it's nothing wrong in going for this kind of things also. Though LIC may be the profit-making company, but in the year to come, this government's holding may come down also. But obviously, the control will be there for the LIC from the government also. But as far as this area and other companies, BSNLs are concerned, these are the loss-making company. Government has taken the initiative to sell this area India also, and that is the right decision also. But here, this to the extent this portion of amount what this government is getting by selling the stake, so we'll be again reducing the burden of this. We can say this current account deficit or even fiscal deficit also. That is one area where this earlier government has also done and this government is also doing.
Ma'am, may I come in on this point?
Yes, please.
Ma'am, I think the earlier speaker, Dr. Sharma, raised the issue of why should we profitize? What is the logic of with these profit-making companies, the sale of this? And now here the basic purpose seems to be twofold, threefold. One is that the government would like to get a good valuation for these companies, and this will obviously help in a case where the fiscal deficit is under severe squeeze. Another aspect is of unlocking value, and all over the world there is strong empirical evidence to show that once this kind of disinvestment rise in terms of efficiency, and this is also happening in case of India across the board. So apart from enhancing revenues, there are also larger macroeconomic issues of enhancing productivity, of enhancing efficiency. So it becomes something like a win-win situation, both for the government and the private sector. Thank you.
Okay. Thank you, all the panelists. Yes, it's over to Simran ma'am, please.
Thank you, Shivani ma'am. Going ahead, Manoranjan sir, my next question is to you again. How is the borrowing of this 14.95 lakh crores likely to impact the interest rate?
Ma'am, this is a huge borrowing, and there's a 14.95 lakh crore. Immediately, one impact was that the bond prices spiked to 6.8% level. And as all of us are aware, for last 2.5 years, there are basically two levers of work which function in these kind of difficult pandemic times. One is the monetary policy lever, the other is the fiscal policy lever. So all of us should be aware that every 2 months on a bi-monthly basis, the Reserve Bank of India governor comes out with a monetary policy statement. For last 2.5 years, we have been following a policy of accommodative monetary policy. The repo rate and the reverse repo has been significantly slashed, but now there are clear indications that the glide down of monetary policy has to begin. There's, I think, some earlier also speakers also referred to rise in inflation. And here what you find in India is that there are 6 measures of inflation in India, but the two commonly most measures are the CPI, Consumer Price Index, and the WPI levels, Wholesale Price Index. While the CPI seems to be at the level of about 6% or thereabouts, the WPI inflation for last 6 or 7 months has been constantly in the double digits. Yesterday also some figures were announced. Again, it was at around 12% or so. And another thing which could throw a spanner in the works is rising crude prices. So obviously, this kind of a huge borrowing is going to put pressure, accentuate the pressure on the interest rate, and going forward, we see a hardening of the interest rate. Thank you.
Patil sir, may I have your views on this as well?
Sorry, there was a call. I didn't get this question, please.
All right. We were talking about that there is a proposed borrowing of about 14.95 lakh crores. How is this going to impact the interest rates, sir?
Yeah. So when we look at this total budget size, around 39.44 lakh crore rupees is the total amount of this expenses which this government is proposing to spend, of which we can say around 35% of the total amount is being taken as a loan from the different areas. Because government revenue is only 22 lakh crores, whereas this expenses proposed is around 39.44 crores. So in this case, though this loan portion was there in the earlier budget also, this is again increased. But other point what we have to understand is this government Gati Shakti is one of the important project where this government is thinking, and this is the capex that is increased by 35%. So this will have a very positive impact on the Indian economy, because I have also mentioned this is not expenses, we have to consider an investment. Investments gives the benefit for a longer period of time. Though we are taking money from the different areas in terms of loan, but this will definitely help us for this one. So another important concern what we have to understand is 20% of the total revenue which we are expecting for the 22-23 is being spent for only paying the interest on loan. So this is the big burden we have, and that is to be reduced actually. So though there is a point in this question, but the another point we have to understand is, so the investment what this government is making will give a benefit for the next coming years. So we have to expect the benefit of this budget only in the years to come, not immediate. So we cannot expect immediate benefit from this one, because government is spending huge money on capital expenditure. So that's the reason normally people are thinking that we are not getting benefited out of this, including the salary people also. That is it.
Right. Thank you, sir. Meanwhile, students, I would ask you to, I would request you to keep shooting your questions on the chat box so that we can take up your queries as well to the panelists. Shivani ma'am, do we have any questions for now from student side, or shall we continue with the discussion?
So there's one question in the chat box. There's a lot of talk on the capex, but how we will going to cope up with the K-shaped recovery? It's like our India is seeking K-shaped recovery in the economy. So what is there in this budget to make the recovery as a V-shaped economy?
Ma'am, may I take it, ma'am?
Yes, please, sir.
Madam, there has been a great deal of debates and discussion in India across the world over the shape and size of the English alphabets, whether this kind of a recovery would be V-shaped or K-shaped. Now, V-shaped recovery means that you have a steep plunge, but then you get up almost immediately. As almost all of us are aware that last year, April 2020 to 21, this was terribly bad. We had a contraction of 23.9% in Q1, followed by 7.3% in Q2, with the result that despite some traction, despite some growth in Q3 and Q4, we still ended the financial year with a GDP contraction, negative growth of around 7%. Now, it was widely expected that will grow very fast this year. But apart from this growth in mere quantitative terms, some qualitative aspects have also been raised, and this is why the concept of K-shaped recovery has come into sharper focus. One implication of this K-shaped recovery is that the process of distribution of income and wealth has aggravated in case of India. Now, in this post-pandemic world, this is going to be a worldwide phenomenon, and I must say that both the government of India and the Reserve Bank of India, planners, policy makers, bankers, all of us are fully conscious and alive to this issue. They are making coordinated and concerted efforts so that the needs of the informal sector, needs of financial inclusion, micro, small, and medium enterprises are fully addressed, or addressed at least to the extent that is needed with a sense of urgency in these difficult times, so that the process of inequality of wealth and income, the skew in distribution of income and wealth could be contained within manageable limits. Thank you.
Ma'am, I just want to add upon to what Dr. Manoranjan ji has said. In the larger sense, he has covered all the aspects of what we said. That in English letter alphabets K, V, A, B. The linking of questions of capex with K-shaped recovery That seems to be an injustice with the capex. As I already said, that capex are never meant for an immediate recovery. Capex, with Professor Patil and Manoranjan both have been emphasizing from the very beginning, is always for a long term. And taking into other factors, if you're looking, if you want to just build up the way of recovery of the economy, economy will recover. Economy will recover because we were at a very good level and we went down because of a pandemic. So the moment things will settle down, it will again rebound to its original level, and probably in a shorter span of time as compared to other crises during the subprime crisis or what we have seen. So we should not link the capex investment that the government has planned for in this budget with the immediate recovery of economy. For immediate recovery of economy, there would be various other measures that would be required. Some of them have been put in place, and probably I expect that the other measures to follow in coming days.
Yes. Patil sir, would you like to say anything?
That's fine. They have covered almost
Okay.
everything. That's
Okay,
fine.
Simran ma'am, this is over to you, please.
All right, all right. So, being an agricultural economy, obviously, we're expecting something in the budget from the agricultural sector as well. So, in the budget 2022, government has proposed to deliver high-tech services to the farmers. For example, there have been proposed use of drones, launch of a fund with the blended capital to finance the agricultural startups. Kapil sir, my question is to you: what are your views on this?
Okay, ma'am, a very, very important question. Before answering the question, I would like to take you back to the budget of 1718. Okay, where if you remember the India Today front page, it was a man with a dhoti kurta and carrying a budget in his hand. So it was called as a farmer's budget. What happened after that 1718 budget? Because probably the government said that, look, we are heading for an election in the next coming years. The government sat quietly, and suddenly we all know what happened: the three farm laws, the repeal of farmers laws. So there was a huge disturbance in terms of what are the types of reforms that the government should bring in order to improve the agricultural sector, because Indian economy is an agrarian economy. Our driving force for the economy comes from the rural sector only, and we know that the agriculture pattern, the land holding pattern, the way of doing agriculture business in this country has traditionally remained the same, with very few improvements, and whatever improvements have come, they have come up with a very longer period of time. Now the government is built upon, and that's a very positive move, that the government wants to modernize the agriculture sector. And for the first time in the history of Indian since independence, some government is talked about a public-private partnership in the agriculture sector, whereby we are talking about reforming the way of doing the business, reforming the way of doing the agriculture. And look what the government said: look, we have wonderful research institutions, public sector research institutions, who have a very good proven record. Okay, we from the Harit Kranti, green revolution, to we have here today, from a country which used to import wheat, we are today we are sending wheat to other countries as charity. Okay, now but these research institutions are somewhere lacking in terms of funding, because it was not coming from the government, it was not coming from the private sector. Focusing upon this inherent strength of the research institution, public sector research institution, government came up with a public-private partnership model, whereby they said that, look, there will be a blended capital mode with co-investment model through NABARD. The private players can come into, they would invest into startups which would focus on revolutionizing the way of doing the agriculture, right from it's not just reaping the good crop, it is till the end where food processing is the last point from where the government wants to put a full stop to. And Kisan drone is one of the important steps that the government intends to take, promoting the use of drones for crop assessment, land record digitalization, spraying of insecticides, spraying. So a very, very welcoming step by the government, whereby clubbing the strength of the public sector research institutions with the capital from the private sector for the larger benefit of the agriculture sector as a whole. That's all from my side on this question.
All right, all right. Thank you so much, sir. We have been talking about private capital investments in our discussion, sir. So my next question is to Srinivasan, sir. Sir, how promotion of public-private capital investments is possible with the Union Budget of 2022 under tax incentives for IFSC to ensure the overall fiscal management?
Yeah. Few points we have to understand this purpose of budget is they have made these 4 pillars of this budget. One is to consist inclusive development. This overall development of the country is one area where they have considered for. And another is this productivity enhancement. Then third is this financial investments, and next is this PM Gati Shakti. So considering these 4 pillars, they have just put upon some of the important areas. So in order to manage this fiscal deficit, few points they have considered is to increase the revenue part is one aspect, and another is to reduce this expenses also. We have seen this majority of this amount which this government is used to spend used to be spent for some of the areas like we can say the subsidies also. So subsidies and pensions and some other areas. So these portions have been coming down continuously. We have also seen this fertilizer subsidy also. 15% was there earlier. Now it is increased to 17%. So though this government is not willing to go for this giving subsidy for certain areas, so instead of giving this subsidy to these fertilizers, they want to go for even chemical-free farming also. So this way, government is going for some alternative ways always. So one is to strengthen this existing or even this Indian startups or even companies also. Another is to avoid some things which are harming this health of the people also. Therefore, chemical-free farming is one area where they are looking upon. And another is the other things also. We can also see this pension-related things. So earlier, 5% of the total amount used to be spent for this pension. Now it has come down to 4% also. In the years to come, it may come down further also. So by this, the expenses side is coming down and the revenue side is again increasing. Though the spending this portion is increasing, but the government is also thinking on the other aspects also. And even the other things also, we can see this expenses in terms of interest and even the subsidies, other things also increasing. So when they are going for this e-vehicles and even this sovereign gold bond kind of things, and even this Atmanirbhar scheme, so this will definitely help this government to reduce the expenses on purchasing products from other countries. By this current account will be also strengthened, and even this fiscal policy or fiscal deficit will be also to a certain extent it will be helpful. So therefore, government is again putting taking most of the initiations in strengthening this kind of things also. That's how this fiscal management is again being done for last many years, and this is also the area where they have looked upon. Thank you.
Patil sir, there is a question, the same on the subsidy part from Amit Kumar Singh. He's asking that by reducing or removing subsidies by the Indian government, is Indian economy is going to become a market-driven economy like a USA? Is it a good thing or not?
Yeah, so according to me, this is a good decision because majority of the amount earlier we used to spend for subsidies only. It's not that only subsidies to be given for this poor people. So subsidies given for many of the aspects also. It may be in terms of oil also. So gas cylinder earlier we used to get this subsidies also. Now it has been almost reduced only. Though subsidies there, but very less amount of subsidy we are getting. And even majority of the people in India, they have given up also. So that's one area. And when this oil companies like Hindustan Petroleum, Indian Oil, this Bharat Petroleum used to get subsidy from the government also. Now they are not getting also, but they are making this profit also. But government's spending on this is also reducing, one area. So another is spending on subsidies for fertilizers related thing is again in the years to come it will come down. But the same amount is being earmarked for strengthening this agricultural equipments also. So in case farmers are purchasing some agricultural equipments, so subsidies will be given or less price will be earmarked for this agriculture related products also. So one area we can see this reducing this subsidies, and the same amount is being spent for other areas also. Even this capital expenditure is the area where they are thinking on this also. So other areas also we can see some subsidies even for some of the areas also. I don't think this government is reducing subsidy on certain areas where it is required. Maybe for senior citizens or even Divyangas or some of the areas. So this is going to be continued. And again, this traveling in certain areas, maybe the flight or railways also. This is going to be continued. But subsidy in oil companies, subsidies in fertilizers, this has to be reduced. So this will further strengthen the economy. So that we have to understand that subsidy is not that only this poor people will stop getting subsidies. So that should not be a thought.
Dr. Shivani, I just want to add one thing when we have touched the issue of subsidy, because that is a very sensitive issue when it comes to subsidy in agriculture sector. Now there is a paradox when we talk about subsidy in agriculture sector. The amount of subsidy, despite Indian economy being an agrarian society, the amount of subsidy that the government gives to Indian farmers is far less than what a farmer in US or in Europe gets or in Denmark the farmer gets for the subsidies for that the subsidy for which he grows. Now the paradox in our country, what is happening that on one hand you have Swaminathan committee report which talks about eradicating all the subsidies, but at the same time that the Swaminathan report says that you eradicate all the subsidies but increase the supporting price, minimum supporting price. Over a period of time, what is happening in this country is that in the name of signing the WTO agreement, because WTO has never stopped governments from spending 4% of its GDP for subsidy to farmers. For countries like India, it can go up to 6%. But what the problem that is happening is that we are reducing the subsidies for our farmers, but on the same hand, we are not providing them the minimum support price for which they should get. So you cannot beat the agriculture sector from both the hands. I firmly believe that since it is very difficult to put a mathematical formula and determine what is the minimum support price that issue, better we continue with this amount of subsidies rather than what is happening in terms of subsidies to the fertilizer. The fertilizer companies were getting the subsidy, not the farmers. There is a model that has come which we say that don't give subsidy to the fertilizer companies, let the fertilizers companies sell at a price. You give a direct subsidy benefit to the farmer in his account. So over a period of time, yes, subsidies for various others, unproductive subsidies have been curtailed, they should be curtailed, but subsidies to agriculture sector, we still need to give a very humanitarian thought towards that. And that's what my submission to this August gathering is.
Yes. There is in the same line, there is a question that government has given has increased the budget in the defense but decreased the budget for the farmers. So what is the opinion of the panel members on this? This is a question from a Saurabh Sharma side.
I guess I have already covered that the amount of, because see, when we talk about amount of money for the farmers or for the agriculture sector, majority of it comes in the form of subsidies also.
Yes, definitely.
Okay. So that is definitely going on a downward side, and that is somewhat my worry as somebody who closely looks at the agricultural side of the economy. That is my worry.
So is there any zero budget agriculture which has been introduced in the union budget? Is there any zero budget?
There attempts have been made, but frankly speaking, why the zero budget concept cannot be implemented in the India? Because the entire ecosystem of agriculture in India is very small. We have very small land holdings of 2 acres, 3 acres. Majority of the farmers have very small holding, because the zero budget it can replicate when the farm holding is very big. Look at the type of farm. 4% of the American population is engaged into agriculture, and that feeds the entire US. And they also exported. Whereas on the contrary, more than 50% of the Indian population is engaged in the agriculture sector, but then also we are so you cannot equate, because that entire concept is based on certain assumptions and certain parameters which cannot be replicated in totality in Indian conditions. So we will have to Indianize, Bharatikaran karna padega hame us pure concept ka, then only we'll be in a position to implement it.
Okay, fine. Thank you, sir, for such a fruitful inputs. Yes, now it's over to Simran ma'am, please.
Students, I request you to keep putting your questions on the chat box so that we can take them forward. All right. So meanwhile, there is one question for Manoranjan sir. Sir, in the current budget, there has been a relief measures for the distressed MSME sector. These include the interlinking of various portals, expansion of the Emergency Credit Line Guarantee Scheme, that is ECLGS, to up to 5 lakh crore, revamp of Credit Guarantee Fund Trust for Micro and Small Enterprises, CGT MSC, and the rollout of the Raising and Accelerating MSME Performance Program. Is it a good move to revamp the CGT MSc and provide an extension to ECLGS until March 2023.
Yes, ma'am. I certainly think so. I think some of the earlier speakers also highlighted the significance of the MSME sector, micro, small, medium enterprises. They produce about 8,500 kind of products. They provide 40% of manufacturing, 40% of exports, and they are the largest source of employment in the Indian economy, next only to Indian agriculture. So you take any parameter. Micro, small, and medium enterprises is important both from the considerations of economic growth and distributive equity. Towards this end, the allocation to the MSME sector has gone up to 21,500 crores, which is 27% more. Emergency credit has been extended up to March 2023. Guarantee covered has been extended by an additional rupees 50,000 crore to provide assistance to COVID hit MSMEs, to provide fully guaranteed and collateral-free additional credit to MSMEs, business enterprises, mudra and borrowers, and individual loans for business purposes has been emphasized. So I think all these are welcome measures, and they are particularly needed at a time when the entire MSME sector has faced the ravages of the COVID-19 pandemic, which has disproportionately hurt the people working in the MSME sector. So again, I'll stress this is a welcome move. Thank you.
Yes, Simran ma'am.
Patil sir, I think you have unmuted yourself. You have something to add to this?
No, madam. It's
All right,
okay.
all right. Okay. So we do have one more question from the student side in the chat box, and it says that how can we minimize bank scams or frauds? Like recently we have seen AGP shipyards few days back of around 22,000 crores.
That's a $1 million question. See, until there cannot be a straightforward answer to this, and I guess my all co-panelist members would agree. We'll have to improve about our because all these are basically Dr. Manoranjan ji is an expert in banking, and he would be in a better position. But these all are operational risks, and we all know researchers have proven that the operational risks in banks have caused more losses. So it's an issue unless we have more transparent system. We bring in more of IT enabled systems into our banking system. These frauds and checks will continue to be there, and over a period of time, stringent regulatory norms will bring about reduction in these types of frauds and other things.
Ma'am, may I come in on this point?
Yes, yes, sir, please.
Ma'am, it's a very complex and a multi-layered institution. To identify, highlight some important
Manoranjan sir, you're not very
when
clearly audible to. I'm sorry to interrupt you in between. Manoranjan sir, I'm sorry to interrupt you in between. You're not clearly
not audible.
Not clearly audible. There is a lot of disturbance. I think the bandwidth is low of the network.
Okay, ma'am. Is it better now?
Perfect, perfect, sir. Yes, sir.
Ma'am, we have to look at this aspects of pre-sanctioned appraisal process of the loan, post-disbursement supervision and monitoring. And there have been a lot of empirical and theoretical studies which clearly bring out that though there are several aspects in the loan process, 85% of frauds in the banking system stem from loans and advances. So there has to be careful at all stages, pre-sanction appraisal, post-disbursement supervision and monitoring. Cyber frauds have come into being. I think all these aspects of credit risk, operational risk have to be carefully monitored. But this is not a once for all kind of exercise because the fraudster are always one step ahead of the bankers. So this has to be an ongoing exercise, and synchronized measures have to be made by the bankers, the auditors, the inspection team, the regulators, so as to discernibly improve the situation on the fraud front. Thank you.
Mute. Yes, Simran ma'am, say thanks. Hello.
Thank you so much, Manoranjan sir. Shivani ma'am, over to you.
Patel sir, there is a question on the inflation part that what is there to beat the inflation, to just reduce the to just minimize the inflation so that the middleman can get some benefits? Is there something about the inflation part?
Yeah. So normally, inflation is one area where we have to consider that. Based on this one, this interest rate will be fixed. So interest rate will be around 1 to 2% is higher than the inflation rate. So what we have presently. So that's one area, and reducing this fiscal deficit is again the very important idea. Though the government is trying to make it, so expected this fiscal deficit was around 6.8% of the GDP, and now proposed is 6.9%, which is slightly higher than the estimated one. And for the next year or maybe after 1 or 2 years, it is not possible to come down below this 5% also. Nirmala Sitharamanji has said clearly that this GDP percentage of this fiscal deficit towards this GDP will come down only after 24 only. So till that we cannot expect that this will come down, because this government's expenses, the spending is more and revenue is again less. So this one area we have to understand. And meanwhile, we are also seeing that this GST collection is increasing month-wise also. So we have seen this 1.47 lakh crore rupees GST is collected in the last January month, and it is again expected to increase further also. So three areas we can consider. One is direct tax, another is indirect tax, including this customs duty. So together we are getting around 46% of the total revenue from this tax aspects. Government is trying to increase tax base. So because of this demonetization, because of this GST and other strict action by the government, the number of taxpayers in India has been increasing continuously for last few years. We have observed it. So though the tax filing number of tax filing people are more, but the actual people who are paying the tax is very less. That we can say around 2 to 3% only the people those who are paying the tax. So government is trying to increase this base also. When this base of the taxpayers is increased, then only we can expect the revenue, more revenue. So by this we can understand and this improvement in this fiscal deficit parameter. So that the government is again trying to do that, but we can expect this. The minimum fiscal deficit will be possible only 24, 25, 2025 onwards only. So that's what my submission.
Okay. Thank you, sir. There's one more question regarding the foreign direct investment (FDI). That how much how many policies are framed in the FDI concern? That what is their good regarding the FDI? And any panel member can just put their points.
I'm not very clear with the question. Is he talking about the relevance or genesis of the FDI or specific FDI with respect to this
What new
budget?
additional policies which are being framed under the
To
budget?
my understanding, the government has not come up with any in the budget. They have not changed any rules with respect to FDI. The norms are same. Maybe in coming days we might see some changes in the norms with respect to certain sectors or something. Because major reforms in FDI were done during the first COVID wave when the government has come up with lots of increase in the insurance sector, FDI norms and other things. So they were there. But predominantly in this budget, nothing concrete or focusable has been mentioned in this budget.
So that's all from the
So
students.
FDI again in different areas it is permitted. As I have said, is in defense it is permitted to the extent of 100%, and even to the extent of 74% is permitted in some financial sectors, and 26% was allowed earlier in this insurance. Now it is increased. So there are some different areas where this is again made from 24% to 74, even 100% in certain areas also that is there. So that will also help us in increasing this revenue in the government.
Yes. For sure, sir. Okay, Simran ma'am, this is all from the student side. So can we move further?
All right. So at the offset of the discussion, a one-liner conclusion would be overall, the Union Budget 2022-23 has stayed true to the long-term goal of complementing macro growth with focus on infrastructure, digital economy, and fintech, tech-enabled development, energy transition, and climate change. I hope the students have benefited a lot from this a good session wherein we had a good discussion from all the panelists. Further, I would invite Dr. Shivani Sharma to propose the word of thanks.
Thank you so much, ma'am. First of all, I would like to thank every expert in the panel to just accept our invitation on a very short span of the time. And yes, it was a very nice and very fruitful discussion for our students as well as the faculty members. I would like to thank each and every panel member. I would also like to thank Dr. Nishan Joshi, sir, Director PIMR Gwalior, Dr. Navita Nidhani, ma'am, Deputy Director of Department of Management, Dr. Tarika Singh, ma'am, Deputy Director of IT, Commerce and Law, for giving us this platform to discuss some uh, uh, interesting inputs and interesting facts and figures in this session. Now, moving further, it's an honor to have you, Dr. Manoranjan Sharma, sir. You're very experienced personality. You have a tremendous experience of the banking and the financial sector. So I would like to thank Manoranjan Sharma, sir, to be a part of this panel discussion. Thank you so much, sir. I would like to thank Srinivasan sir, Srinivasan Patil sir. Yes, this is a first interaction between you and the Prestige Gwalior, but it was really you're a very down to earth person and you have accepted the invitation in of one call only. So your inputs, your opinions were extremely great on the budget. And thank you so much, sir, for accepting our invitation and come on this uh, panel discussion.
Yes. Thank you, madam. Thank you, team, for inviting me. Thanks a lot.
Yes, Dr. Kapil Sharma, sir. Sir, I am from Devas itself. I have done my PhD from DABV only under the guidance of Dr. V.K. Jain, sir. So it's very like the first connection with you was that you belongs to Indore and I am also from there. So it was I was very happy to just be in connect with you. And yes, you also accepted the invitation on a first call only. So I would like to thank Kapil Sharma sir for giving his so knowledgeable so current the data on the budget discussion, and thank you so much, sir, for joining us. And moving further, I would like to thank Pharma Club faculty members for their kind support in organizing this event, all the faculty colleagues as well as the dear students, and Ms. Simran Rohira ma'am for coordinating this to be a moderator of this panel discussion. And in the last, I would like to thank Divyani Rajoria. She is a student of MBA first semester. She has coordinated this event. So thank you all once again. Yes, very soon we will come to the another platform and we will interact again. We look after for the more association with all three experts. Thank you so much, everyone.
Thank you, ma'am. Thank you.
Thank you.
Thank you, ma'am. Can you leave the meeting now?
Yes, sir.
Thank you.
We
Thank you,
will
everybody.
end
And
the
thank you,
meeting,
Dr.
yes.
Manoranjan and Dr. Srinivasan ji.
Yes.
Thank you, sir. Nice
Thank you.
discussion with you.
Thank you, ma'am.
Same here, same here.
Associate
You
further
may
in
leave the
the
meeting.
years to come.
Yes. Thank
Yes.
you.
Thank you, Manoranjan sir. Thank you,
Sir,
Sharma sir, for the nice interaction.
Yes. Thank you, sir.
Thank you.
Okay, so I'm ending the meeting. Thank you.
Special thanks to Shivani Sharma, Dr. Shivani.
Yes. Thank you, sir.
Yeah. Thank you all.
I'm ending, sir. Bye.